Hey, welcome back. Welcome back. This is video for my top tier, my cafe au layers. And today I wanted to talk about some fundamental trading, what it means when the housing numbers come out. One of my favorite things these days. What does it mean when we see the data that housing sales went up, housing sales went down, home prices went up, home prices went down, less homes being built? What does that mean? What does that mean? How does it affect us, right? And what does that mean as us living in the real world with that data? I think we all kind of know where this is going. Home prices, ooh la la. Interest rates, ooh la la. And how can we trade with it? How can we trade with the market expectation and the market reaction to that data? Well, let's go find out. So if you follow the news at all, or you're just a living, breathing adult, you keep hearing about the housing market. So what affects that the most is interest rates. So if the federal government is raising interest rates for various reasons, we won't get into that on this video, but if they're raising rates, that really makes it more difficult for a lot of Americans to purchase that home. 2 years ago, interest rates were a lot lower than they were now. And I know when I owned a home, I owned a home for 23 years and I sold it maybe 8 years ago, 7, 8 years ago. And I know my rate was 3.25, and I worked really hard to negotiate and find the right bank to lend me money at that rate. It was actually refinancing, consolidating loans and refinancing. And that was a good rate at the time because I was going from 4 something on one loan and 5 something on another loan. And I was combining them for 3.25. And I'm like, even I knew back then without knowing anything that was an amazing deal. And people were saying, oh, that's a good deal. I'm like, yeah, it's a lower number. I didn't really know what it meant. And here's something that a lot of you may or may not know about me. I went to school and have a bachelor's in economics. And I never really used that, but I feel like even way back when, I was just guided to follow that path. And back then it was for no reason. I just didn't want a business degree. I didn't know what I wanted to do, and I didn't want a business degree. I wanted to have an edge. Economic degree would give me an edge. So you definitely don't need an economic degree to be a trader. Not at all. But anyway, so I learned micro and macroeconomics and statistics and everything that goes along with that degree. And if you know anything about supply and demand, the less there is of something, the higher the price will go. Like there's more people who want it, and there are more people who are willing to pay a higher price to get it. You want this, I have a little fidget. You want this fidget, and there's only 8 of them, 100 of them. You're going to pay more. That's really, Cindy, that's really cool. It's that little poppy bubble things, makes like a bubble wrap noise. Amazing. If you want it, I'll sell it to you. But say there's a limited supply and nobody wants a regular fidget. This one's pretty cool. This one's like tie-dye. And so, the less supply that you have, the more people will pay for it. Well, it was $5, but now I only have 10 left, and so I'm charging 10. Okay, I'll buy it. So the less there is of something, the more that you can charge. And we're a capitalistic society, so people are going to take advantage of that. So that's what's happening in the housing market. Well, I digressed a little bit. Rates are going up, so it's making it harder that's where I was. It's making it harder to get a loan because your rate is going to be a lot higher. And people are not only looking at the price of, say, a $300,000 home, but they're looking at what's the monthly nut, what's the monthly cost with the, escrow, with the insurance and property taxes and flood insurance and whatever else you might need. There is such a noisy truck outside here. Whatever else you need, like what's it going to be? The actual mortgage might be, $2,200 a month, but then you add up all the other stuff, and depending on what you put down, you're taking a loan out for, 7.4% today. So, I call it the monthly nut. Your monthly nut might be, instead of 2,200 now, it's 3,400. Oh, 34 makes it really tight. You're trying to raise a family. 22 you can handle, but now that's really stretching it. And I'll tell you, today in this market, you don't want to stretch yourself. You've got to be comfortable with that final number that's going to hit you every month that you can't be late on. But so what's happening in the housing market now is, because rates are so high, right? Less people who they might need a bigger home, or they might want to downsize. So they already have a home, but they're not so excited to get out of that existing mortgage that they have, because, well, let's face it, most mortgages here in the US are 30-year unless you refinance. At one point I refinanced down to 15, and that was cheaper, and we just wanted that loan gone. But I lose my train of thought. So less people are willing to sell their home and make that big profit, but now they're jumping into a new home where the mortgage rate is over 7% on average. So who would want to give up their 3-point something or 2-point something loan? So there's less houses on the market, and what I just said, of this less of something available, the higher the prices are going to go. And people are just scrambling for houses. I've seen it again and again. You can see an open house, you can talk to your realtor, you go to see it, and you walk in the door, and there are literally offers already on the table for well over asking price. And now you're like, who can do this? Who can afford a home? So, in the flip side, the worst thing is that if you can afford a home and you're renting, now you're stuck renting. Right, you're stuck in the rental trap. And we all know what's happening to rents. Those are also going up. And I know several people whose rents are skyrocketing. One point, personally, 20%. Dang. If you could get a house, you would, because that rent is almost equal to what you would pay and own and start building equity in your own home. So it's just getting to be a dire kind of situation. But people are not able to buy because of the interest rates. I have a bunch of notes here, sorry, so if I'm looking down, but there are people who have money. There are people, you've heard it, the rich keep getting richer, the poor keep getting poorer. There are people who have been able to capitalize on the market the last 3 years, and so they are able to afford these homes. They're able to ask more, they're able to outbid you. And there was literally trillions of dollars added to the economy during COVID. So it's still there. It's still floating around between investments and investors and the stock markets and the housing market. Like, it's still out there. There's just too much cash out there. So, it's going to be hard to get rates down. Some of my notes from recently were 50% of homeowners have paid off or have over 100% equity in their loan. 50% have paid off their loans, but they're still in their loans. Okay, what about the other 50%? They're still owning. And some of them have just over $100,000 in equity, but that's really not going to get you anywhere in this world right now. So people aren't buying because the rates are high. The supply is down. People aren't selling, and people are stuck in rents. People are stuck in rents for sure. But let's look at a couple of things. Some figures came out this month. What I did was put it into a whiteboard here. So let me just show you figures from August. Some were August, just last week, August 20th, depending on when you watch this, 2023, and just Wednesday or Thursday of this week. So 28th or something like that. So inventory, this was the number that just came out. Inventory in the market. Can I click this? Can I open it? Oh, my reminder's going off. Why can't I open that? It looks like I can open it. It's not letting me open it. It's not letting me open it. Okay, hold on. Let's get out of this. I wanted to share this with you. I will leave these in the video so you can take a look. Yep, it's not gonna let me. I don't know. I guess I should have practiced that more. All right, well, we'll leave this in here, me being transparent. Let me share my screen. I believe these might still be here. Hold on, let me just. Housing inventory. Okay, back to my Zoom and share housing inventory. Right here. Now I'm short on time, guys. Housing inventory. So numbers that just came out. These are the two links. One was housing inventory. One was like what's out there, right? Versus home sales. So what's out there for inventory, as you can see, there's more inventory out here now from the July numbers from the June numbers. But if you can look back here, man, not many homes. And these are thousands. Inventory is 1,110,000 homes on the market for sale versus a lot more up here. Okay, so the housing market's getting tighter, like I said, less homes, although they did go up this month. And these numbers right here, this is the other chart I wanted to show you. Existing, see if I can go to it from here. Existing home sales. Okay, here we go. Oh, it's the same chart. Great. Existing home sales, you can see how home sales have dropped from just a year ago, when in July of 2022, the number was 4,880,000. Okay, and back here now the number has dropped quite a bit. Less houses on the market, more expensive houses on the market. How can we take advantage of this? Data comes out every month. You can check those two websites yourself. I believe you can see it, the existing home sales and also housing inventory. And here are the links right here. So let's go to the charts and see what happened when those numbers came out. So super quick, this is, as you can see on the bottom here, oh, not the 18th. All right, hold on one second. How did I get that messed up? Oh boy. Okay, hold on. Okay, I was on the wrong date. And I'm probably not even going to cut that out because it just doesn't matter. So on the 22nd, existing home sales came out. The numbers were lower. We forecasted our previous sales. I'm just looking at on Forex Factory now, and you can look up these numbers if you want to. On Tuesday, August 22nd at 10 a.m., which I marked right here, previous sales were 4.16 million. They forecasted a little bit down, 4.15 million. So anytime there's a greater number, if anytime there's a huge difference, higher or lower than the forecasted number, there's going to be like wicked movement in the market. So the actual number was 4.07 million. So that's quite a jump down. So you can see what the market did. So this is how you can trade with it. And for 4 hours, that market stayed low, and then you can see it consolidated. It's just been consolidating. So I trade US 30, and US 30 goes based on the reaction of the news. So this is one way that you can trade with it. And then just recently, where is it? On the 30th, here we go. Pending home sales. How many homes are pending, like in the works, pending? So those numbers on the 30th were at 10 a.m. So I marked at 10 a.m. when the numbers came out. Look at that candle. Numbers were forecasted at 0.04 previous pending, and the number was actually 0.09%. So in this case, this is a part that I think frightens people. These numbers were higher than normal, and I think unexpected. And so there was a drop in the market, because this market is so resilient that anything off the mark, I just say startles people. So these numbers were a reaction, not only to that, but also GDP was up before, so things really leveled out a little bit. But what I'm trying to say is that these major shifts in the market are tradable moments, and that's something you should watch out for. And if you're looking to buy a home, keep an eye on those two sites that I referenced. Again, they are right here. You can find them right here. Current inventory, what's out there, how are the numbers doing, what's out there on the market for houses. Well, it's getting pretty tight, as we saw, and how many homes are actually selling. So a little bit more homes sold this year, like the percentage went up a little bit this month, sorry. But again, all of this news affects the market and makes it very tradable. Okay, guys, thank you for listening, and stay tuned for more fundamental analysis on here. This is how I trade all the time with Forex Factory. All right, I will talk to you soon. Thanks.